So what is fundamental analysis? It's a method of evaluating security and attempt to measure its intrinsic value. That's its actual value, looking at assets, whether they're tangible or intangible assets, by examining related economic, financial, and other quantitative and qualitative factors. So basically, we're going to be looking at management, we're going to be looking at economic factors, we're going to be looking at their balance sheets. Any questions about what actual fundamental analysis is? Okay. So before we get into it, I'm going to break down the pros and cons of fundamental analysis. So I remember y'all were here for the technical analysis pros and cons. Whenever we're learning a new analysis, it's really important to understand what the analysis is great for and what its weaknesses are. So you can devise a trading plan, maybe combining the 2 or 3. That's what I personally do. So the pros is that data is readily available. These balance sheets are required legally every single year, 10Ks, etc. So those are readily available for you just on Google. You can also find the management. You can also do some research on a particular industry. Whatever you want, usually the data is readily available. Another pro is markets are usually driven by fundamentals in the long term. So if you look at things like the dot-com bubble, those were fundamental nightmares. There was no intrinsic value. People didn't understand what was actually going on. And once when the market realized the intrinsic value or the fundamentals were wrong, the market actually corrected itself. So there's a theory that in the long run, markets are actually driven by the fundamentals or growth of the company itself. It also allows for a determination of a company's intrinsic value. We'll touch a little bit more on this at the end of the day, definitely in 2 weeks at the next fundamental analysis part 2 meeting. It also uses stats. So unlike technical analysis, where the patterns that we were looking at, there's some room for error. I could see something, you could see something completely different. Usually fundamental analysis, except whenever you're looking at the accounting numbers, are going to be based off of statistics. So there's really no room for personal bias. It also increases the understanding of a company's and their business model, because we're going to be diving into a little bit more than just the stock price chart. So let's get into the cons. It's tedious and time consuming because you're going to have to look through some 10Ks, you're going to have to look at the industry, you're going to have to look into some management, find out who's running the company, where they come from. So it's very time consuming. A lot of people really don't like the stock fundamental analysis because you can expect to spend hours just on a particular company.
Just one document.
Yeah, exactly, on one document. And that's after you've been doing it for a while because these documents are very long.
Hundreds.
Exactly. So it's also a long-term strategy, especially whenever we're going to be looking at the accounting, because those are released every quarter. So if you're looking at accounting numbers, you can expect a long-term trade because you're evaluating off of years of data. You're not going to expect the stock to make a move in a month or 2 because you're looking at periods of 4 months continuously. So it's not as short-term as technical analysis. You're going to use this for longer-term trades. A stock could also be fundamentally strong and still underperform. So you could find a company that hits all of these, but what drives the market price, I'm sure you all know, is supply and demand, right? So if demand isn't increasing, or if the market doesn't realize that an asset is undervalued, then the asset could actually still stay at the current level.
That's what, what's that guy's name? He buys, right? What's his name? The billionaire.
There's a lot of billionaires. There's a couple fundamental key investors. Warren Buffett. Yeah, Warren Buffett. So they're called value investors, and I'm going to touch on the principles a little bit. There's also Benjamin Graham. Those two are the godfathers of fundamental analysis. Benjamin Graham was the teacher of Warren Buffett. Yeah. So, yeah, those guys are value investors. They're trying to find companies that are intrinsically undervalued. And then there's also no reliable trade signals or buy and sell points. So a company could be fundamentally strong, yet this analysis isn't going to tell you when to buy or sell the stock because the periods are so large. You're looking at 4, 8-month, 12-month periods, or 3, 6, 9, 12-month periods.